Hello and welcome to the basics of annuities. An annuity is a contract between you and an insurance company. What you're agreeing to do is give them money either in a lump sum or payments over a period of time to receive the money back either in installments, which we call annuitization, or in periodic distributions. Now there are two types of annuities. You can have a fixed annuity or a variable annuity. On a fixed annuity, your principal is generally guaranteed, and they're great for conservative investors, and they're a great choice if you have a short-term time horizon, and they have very competitive rates between 3 and 5%. There's also purchase bonus credits. That is, if you agree to put a lump sum of money into an annuity, they'll agree to give you either 1 or 2% of the money that you're putting in as a form of an incentive to investing in their annuity. However, you got to be very careful. Some purchase credits may opt you to go out longer than you initially intended on. Remember, an annuity is a contract over a period of time. They typically can be issued in 1 year, 3 year, 5 year, 7 year, or 10 year terms. So by getting a purchase credit, you may unsuspectingly gone out 10 years when you really wanted something 3 or 5 years. They're also subject to the interest rate environment. Like back in 1998, interest rates were really high, so if you locked in for a 10-year annuity, you were looking like a champ. However, if you lock in for a fixed rate now with interest rates trending to go upward, may not be such a great idea. Fixed annuities are generally low cost as well. But be careful. Always look at the fees, surrender schedules, and the cost inside an annuity before you purchase one. And it's always great to consult with a financial advisor or a financial expert. Variable annuities, on the other hand, invest your money in these things called sub-accounts, which is a real fancy word for mutual funds. Inside the sub-account, you could have cash, large cap funds, mid cap funds, small cap funds, international funds, bond funds. Well, you get the point. Basically an investment mix. It is tied to the stock market. So if you have a weak stomach or day-to-day moves in the market seem to get you jolted, may not be such a great idea. However, you have to understand, investing is not a get-rich-quick scheme. When you invest your money, you invest it for a period of time, and generally over time, the market has done very well. However, it's important to note on variable annuities, the rate of return can vary. The benefit is you have access to multiple investment options. You could choose between different types of mutual funds, as well as mutual fund managers. They're great if you have a long-term investment horizon. So if you're investing for retirement, funding a child's education, or maybe some special purpose that you have down the road. And they also have flexible investment options. This means that you can either change the funds inside there without additional cost, or fund managers, or do dollar cost average, that is, average your money into the funds over a period of time. They also, like fixed annuities, can give you bonus credits for putting money into it. And they may have higher fees. So let's look at annuities at a glance. They're a great investment vehicle because they do offer tax-deferred growth. You can have access to either guaranteed rates like in the fixed, or professional managers like in the variable. They have the potential for future income stream like a pension. So if you decide to annuitize the annuity and take payments, you generally could have payments for life depending on how much money you put into the annuities. They offer bonus credits for putting money into it. They also have death benefit options. For example, if you're on the way to work one morning and the uninsured undocumented bus driver blows the red light and takes you out right there, well, never to fear. The money that you put into it, as long as you specify a beneficiary, would go right to your heirs. In some cases, even avoid probate and other tax situations. And another great feature of annuities, they offer you asset protection, which is your money is safe from either creditors, judgments, or lawsuits. If you're shopping for annuities, it can be quite confusing. There are many different types of annuities, and there's a lot of costs and fees in there that you have to be careful of. And again, it's very important that you meet with an expert or a financial advisor for some good advice. Let's look at some basic cost factors. Generally, annuities are a lower cost investment over time compared to other investment options like mutual funds and managed accounts. The fees may vary from company to company and annuity to annuity. And make sure you review the surrender charge schedule. If you have to take money out of an annuity and it's before the term it's due, you could be whacked for some pretty steep penalties. So if you do buy an annuity, it's very important that you have some type of cash reserve for emergency purposes so you're not forced to go and take money out of the annuity earlier than you originally had planned on. Let's talk about some of the fees that are inside the annuity. A very uncomfortable conversation for your salesman. Inside there are fees such as an M&E or maintenance and expense charge. There's a contract charge, either of $20 or $50. There are a rider charge. Any extras that you get associated with an annuity, they charge you extra for. Now some of the extras could be good, like guaranteed rates or asset protection. Just make sure you review all the fees to the associated riders. Annuities and annuity companies are rated. as to their financial strength and security. A lot of people are concerned over the stuff that just happened on Wall Street, and if they invest their money into an annuity, how safe of an investment is it? Well, they're all rated, and the 3 rating companies are AM Best, Moody's Investor Service, and Standard & Poor's. And the ratings could look like this: a AAA being very good, a AA being good, and an A good. But anything below that, maybe not so good. It's also important that you give yourself a test. Why are you buying the annuity in the first place? How long do you plan on having the annuity? What does your cash reserve look like? And have you really looked at your risk profile? These are really important questions that you have to ask yourself. Also, do you plan on buying the annuity to help fund your retirement? Or maybe fund an education? Is it part of your investment portfolio? Or is there a special goal in the future that you'd like to save money for? You have to ask yourself, how much money do you plan on putting into the annuity? Is it 50% of your investable assets, or between 20 and 50, or less than 20%? And when do you plan on taking it? Do you plan on taking distributions in 3 and 7 years, or 8 to 14 years, or 15 years down the road? And you also have to look at your risk factor. These are a few different types of portfolios, a hypothetical illustration to give you an idea of what your risk level could be. And basically it shows the best performance and the worst performance in any one given year, and the overall performance over a 20-year time horizon. If you have portfolio A, your best could be a 17%, and the worst could be a negative 2%, but over 20 years average 7. In portfolio B, the best could be 23%, the worst could be a negative 9%, and the average could be 9. In portfolio C, the best could be a 37, the worst could be a negative 20%, but over 20 years average 10%. Obviously, if you're a very risky investor, portfolio C may be a little attractive to you. If you're conservative, you may want to look at portfolio A. Now below is a fixed annuity. If you invest your money in a fixed account over 10 years and the rate is 4%, at the end of 10 years you're going to get 4%. However, if the interest rate market environment changes and goes up, again, you could cheat yourself. So remember, if you're investing in annuities, it's very important that you talk with a financial advisor or a financial expert. And also, if you have any questions, you can always drop us an email. We'd love to hear from you. We hope you enjoyed the video and you have a great day.